Are you worried about today's dire financial situation?
Put simply, I would argue the Biden economic plan is working.
The storms on Wall Street continue today after regulators seized the assets of Silicon Valley Bank, marking the largest bank failure since the 2008 financial crisis.
Do you worry you'll have enough to pay your mortgage, pay your children's college tuition, enough to retire?
I believe our banking system remains strong.
Regional banks in focus once again today as the market digests the fallout of the First Republic failure.
You have questions, we have answers. It's the gold standard with Ken Russo and Jennifer Horn.
Thank you for joining us once again, back together again. Ken Russo and Jennifer Horn. This is the Gold Standard Radio Show. Ken, you came in with a whole load of notes, paperwork, and my friend, you even found yourself an old Casio calculator you brought in studio this week.
Yes, I'm sure some of our listeners remember the old Casio watches.
Yeah, absolutely. And hey, nothing better than a Casio calculator. Now, we are going to take a look. We are going to do a little comparison today. Clown hat versus money hat. We'll start with calling in the clowns. But before we do that, Ken, we are in the situation we are right now with where the dollar has lost its purchasing power. It is weak. Gold, silver, precious metals, it's strong. Now, the reason for that is because back in 1971, Richard Nixon turned the dollar, said, you know what, we no longer need this puppy backed by gold. Money is just going to be backed by nothing, the paper that it's printed on. And that sent us on to the trajectory that we're in right now.
And you would be amazed on how many people don't even realize that.
Well, I'm sure.
Amazed.
I'm sure there's probably a ton of people waddling around out there that don't know about that.
It's all my doing. No more gold behind money. Unlimited money printing. Unlimited debt. It's a money printing party. And we control it. We're going to benefit from it. And you people are not.
Good luck.
You're going to continue to lose your purchasing power. And we're going to continue to blow this thing up until bubble after bubble, until they keep popping and popping and blowing up and popping. So, I mean, that's where we're at.
It's better and better every week, by the way.
I don't know. But we'll, clown hats. Saw a lot of clowns this week. We had, the State of the Union address. And actually, I had a special clip from the State of the Union.
It was something.
Producer Mike, can you play the clip?
Well, that was my favorite part. Oh, right.
Remember that one?
That actually makes more sense than Biden made the entire time.
That's right, Joe. I've never seen, like Tucker Carlson said, a more angrier speech and a rant. And that's what it was.
It
Just
really was.
embarrassing, But some other news
Not
of the
a lot
week.
of rosy optimism in that State of the Union speech.
And where was the talk about the interests of the American people?
That was gone. That
There was
wasn't
none.
in there.
So I don't know. It's just embarrassing. It's a disaster. It's disheartening. That's what it is. But on last Wednesday, the Houthis struck a bulker in the Red Sea called the True Confidence. I think sailors died with a ballistic missile, so that's great. The SEC, which is the Securities Exchange Commission, finalized a rule that would require some publicly traded companies to disclose emissions and climate risks. So a lot of these companies now are going to have to determine what the costs are to be compliant with
more operating
climate
expense.
risk. Yeah, more. And where do you think those expenses are going to be passed on to?
us.
Okay,
Yep.
great, fantastic. The New York Community Bank Corp, they needed some more money. They needed a few more $1 billion or else they're going to go under, obviously, another regional bank there. And these were the same folks that took over the Signature Bank assets a year ago, so they're still in trouble. Just keep kicking the can down the road. The government disclosed that they're going to be doing $1 trillion of new debt every 100 days.
Oh, that's perfect.
$1 trillion of new debt every 100 days.
Unreal.
Where's that money going to come from, Jeff?
From the printer, because there's no money to back that up.
More deficit spending.
Yeah.
That's what cracks me up is and a lot of the speech, too, that Biden was talking about, he was saying that corporations are at fault for raising prices. Hey, dummy.
Yeah.
Deficit spending is causing everything that to go on. The government keeps hiring people and they keep spending all of this money that we don't have. What do you think's going to happen to our dollar and to prices?
I actually have some language here from that speech. Let's hear that one more time here.
That's right. That's exactly right. Now, if I was a voter, I would definitely vote for that.
More of that,
and
please.
I would definitely vote for more of that policy, whatever that was. That's working so well. But that's where we're at, Jen. And there is a big difference between having a clown hat on versus a money hat.
Yeah, and I think we want the money hat on, don't we?
Well, that's what we talk about. You
Yeah.
know, we talk about, what could we do to protect our money? We talk every week about the privacy of our money.
Sure.
And we talk about the safety of our money. We're going to talk more this week about the purchasing power of our money, which
And
is the
protecting
value.
that, right? We
Right.
want to be able to spend the money that we've worked so hard to earn. We want to be able to save the money and have that still keep the same value. We don't want to have that go away since we've spent so much time working for it.
Let's do an experiment.
I love an
Me
experiment.
and you.
Okay.
We're going to do an experiment
All
this
right.
week.
Did you
And
bring your beaker?
Now, I have to admit, this also coincides with a blog that I wrote over the weekend. And of course, all the blogs are free at MidasGoldGroup.com.
Yep.
We have a copy of everything we've written. We have copies of the shows between me and you. We have other podcasts that we have on YouTube.
A lot of great content up there.
Yeah, and it's all free.
Yep.
And we also have descriptions of all the different products that clients look at. But this is a blog I wrote, and what I tried to do was to break it down on actual things that people buy, invest in.
Okay.
How do those compare over the last 5, 20, 30 years versus the price of gold?
Okay, I'm excited about this. This is going to be exciting.
So the question is did the dollar keep up or did gold keep up with these particular instances? And I think it's good because the average person could relate to these things, and I think that they're going to be very surprised at what the actual outcome is.
Okay, I like
Okay.
this. All right, so where are we starting? We're starting with groceries,
Yeah,
right?
let's start with groceries.
Okay.
And the example that I pulled up was the grocery list that you and I talked about back in 1990.
Okay,
Cost $19.62.
back in 1990.
Yes. And at that time, gold was $383 per ounce.
Okay,
So it would have cost 0.03 ounces of gold to buy those groceries in 1990. Today, those groceries that cost $19.62 now cost $72. Okay?
that's a huge difference.
Well, it's a factor of 7.
Okay,
The price of gold in 1990 was $383, and if you look at the price today of gold, which is over $2,100, which is also a factor of 7.
wow. In your favor, however.
That's right, in your favor. So it costs 7 times more dollars to own those same groceries, but gold has kept your buying power during that time. So when we compare gold to groceries
Yep.
from, 1990, and I'm sure if we did it from 5 years ago, it's going to be the same thing. Gold holds its purchasing power, but the dollar against groceries does not.
Wild. That's a huge one. All right. So that's groceries. And by the way, MidasGoldGroup.com, if you want to see Ken's blog, MidasGoldGroup.com. You can always call as well, 855-322-4653, 855-322-GOLD. More on how to contact Midas in a moment. But how about home prices? Because this is a big one.
Yeah, this is good. Now, obviously, home prices in different areas vary.
Right.
Now, I thought, well, let's think about Ventura County, California, which is where our one of our offices is, and also the Scottsdale, Phoenix area,
Right.
which is where we're based, right across the street from the Deer Valley
This
Airport.
is fair, right by your offices, because you can go
Yeah.
see Midas face to face. And
Yeah, if anybody's in that area or they want to fly
Thousand
their
Oaks.
private plane in Deer Valley, and come on in and stock
or
up
into
on
Phoenix,
gold and
right?
yeah,
there you
take
go.
off. So there you go.
Load up that plane.
So let's say in 1999 you bought a home for $250,000.
Okay.
Okay, that home today on average is probably worth about $1.8
Easy.
million.
Yep.
Okay, which is also a factor of 7.
Wow.
Okay? Now, the price of gold in 1999 was $279, and the price of gold today, which is over $2,100, is also a factor of 7.
In your favor, as I like to point out.
So, it costs just as much in gold as it did in 1999 today, but it costs, instead of 250,000 paper fiat dollars, it now costs $1.8 million in paper fiat.
Yep.
So for home prices in those particular types of areas, the gold market kept up with the inflation of home prices. The dollar did not.
Did not. Now, and I think the reason it's important, and we're going to go through a few more areas here where we compare gold versus a dollar in several key areas. But I think what we have to underscore, Ken, is that right now, when you have everything going crazy, when you feel the inflation, when you feel that your dollar is not keeping up, gold, precious metals, they tend to protect you, and they protect that buying power that you have in your possession. So if you're looking at making sure that you're in wealth preservation mode, gold and precious metals, it's really where you want to be.
Yeah, and there are other assets that have done it too, but maybe those assets you can't hold. Maybe those assets are not tangible. Maybe they're still too speculative.
Right.
So if somebody said to themselves, well, what could I hold on to in my control that's private, that's also, is not reliant on an electrical grid or the government can't monitor, then that's where gold and silver comes into play. So when you're talking about purchasing power, gold and silver have a long track record of holding your purchasing power or even building your purchasing power, but our fiat money, our paper money, especially since 1971, has not, as a dollar from 1971 is now worth literally 15 cents.
It's tanking. So this is why it's time. If you've been thinking about getting involved in gold, precious metals, maybe you want to add more, you want to keep up a portion of the money in your possession in gold and silver as that hedge against inflation to protect your purchasing power, now is the time. Today is the day. Call Midas Gold Group, 855-322-GOLD. That's 855-322-4653. 855-322-4653. You can also text the word gold to 232425. Midas gets right back to you. And as we mentioned, you can go in and talk to these guys face to face. Look at your options in Thousand Oaks, California, and in Phoenix, Arizona. You get more information and that blog, MidasGoldGroup.com, if you want to see these numbers broken out for yourself. MidasGoldGroup.com. There is more up ahead. More comparisons. The calculator's out. It's the Gold Standard Radio Show. Ken Russo and Jennifer Horn.
Dr. Gorka here. You're listening to The Gold Standard with your hosts, Ken Russo from veteran-owned Midas Gold Group and Jennifer Horn. Owning private money in the form of physical gold and silver is perhaps more important than ever to your long-term financial security. As U.S. banks fail, the Biden administration sends hundreds of billions abroad while depleting our strategic oil reserves. However, the biggest financial threat may be coming from within: central bank digital currency. The patents have been filed and the big banks have released plans for implementation. Midas Gold Group sees tyrannical implications, the end of cash, the end of financial privacy, big government able to see your every purchase. Could there be ties to social credit? Hear more commentary on the political and economic issues that affect your financial security right here on the Gold Standard. You can create your own Gold Standard with a call to Midas Gold Group, 855-322-GOLD. That's 855-322-4653, MidasGoldGroup.com.
Welcome back. It is the Gold Standard Radio Show. Ken Russo and Jennifer Horn back together again. And Ken, always fun to be here. We're going through some comparisons, how gold has done, how the dollar has done. But before we get back into that, you received a lovely email from a bank that rhymes with Schmel Schmargo.
I did. Yeah.
Wells Fargo has an email that they send out to their customers, right?
Yeah, they do, but this is terms and conditions, and
Right.
I'm sure all of the banks do it. And obviously, if they send it to you in the mail or...
Say it's an update to our terms, right?
That's exactly what they said. Online access agreement. Mm-hmm. I had a lady in our office building stop me today and say, Ken, this can't be true. This can't be true. Ken? I said, what are you talking about? I got it from my bank. I says, oh, I know what you're talking about.
You knew?
I knew because I saw it the night before. And this is what it said on the bottom of the email. Investment and insurance products are not insured by the FDIC or any federal government agency, not a deposit or other obligation of or guaranteed by the bank or any bank affiliate.
Does that mean you're on your own?
Is that crystal clear to you?
Yeah.
Okay, that's it. So that means that they're in compliance. And she asked me, is this really true? Could this be? I says, yes, it's always been true. But obviously, it's something that they don't want you to focus on.
Right. So they bury it at the bottom of a little update to your terms and services, and away you go. And this is one of those things where people rely on banks because they think, oh, FDIC insured, that means my money is safe. Well, not necessarily. You've told us before, there's not enough of that insurance to go around. And I mean, even most deposits are only back to a certain point. But even then, if something really catastrophic happened, they're not going to be able to keep up
No, they're
with
not
it.
going to be able to. And if the government prints all that money to make everyone whole, we know that that's going to destroy the value and the purchasing power of our dollar, which
Right.
we're talking about today. So it's one or the other.
Mm-hmm.
But our money is not as safe as you would think, and that's the way it goes.
Yeah. So that's really interesting. So don't fall for it. You know, even when you think
This
you've
is
read.
not us making it up.
No,
Jen.
this is the email's right
Yes.
there. And by the way, what did I tell you? I said I have that same
It's
email.
right here.
I have
There
that
it is.
same email waiting right now in my inbox. So
And I am old
It's out
school,
there.
so when I get an email, I print it out
I
on
like
paper.
it. And with
that's
real
it.
highlighter. That's
Yes,
what I do too.
with a
So,
blue highlighter.
Yeah, that way you can figure it out.
Yes.
All right. Now you write this blog at MidasGoldGroup.com. You should check it out. A lot of great content. Podcasts like this one, the video feed, if you're listening on the radio, all sorts of podcasts from other friends at Midas Gold, and of course, a whole lot of blogs and information, a lot of products as well. So if you want to go through some of the gold that's offered, MidasGoldGroup.com.
And we don't sell your information if you visit our site.
That nice?
Yes.
That's pretty good.
Okay.
I appreciate that,
You're
by
welcome.
the way. China's not going to hack into me or something like that. Now, you were going through some of the things that gold could buy, dollars could buy. We looked at groceries. We looked at home prices. Now you say gold versus the Dow. So
Yes.
let's get back to that. Explain with how that looks.
Well, the Dow Jones Industrial
Sure.
Average, which is the 30, kind of main stocks that the economy
Yeah.
is based on, they constantly change it and whatnot. But the Dow Jones Industrial Average in the year 2000 was, let's see where we're at here, 10,786.
Okay.
Okay. The Dow Jones Industrial Average today, I think, is about 38 to 39,000.
Sounds
okay?
right. Yep.
So the price of gold in 2000 was 280.
Mm-hmm.
So if you bought the Dow Jones Industrial Average in 2000 with gold, it would have took you 38.5 ounces of gold to own the entire Dow Jones Industrial
Right.
Average. Today, the Dow Jones 38,722, gold is roughly 2,100. That means it takes 18 ounces of gold to own the entire Dow Jones Industrial Average
Wow.
today.
Wow.
So gold has outperformed the Dow Jones Industrial Average by 2 times in the last 23 years.
It's incredible.
So people, I know it's slow. I know it's averaged about 10% a year annually over the last 23 years. I know it's not as exciting as a lot of other things that's going on. But when you adjust it for inflation and when you look at purchasing power, gold, according to, any other major asset, and I'm not talking about a crypto
But
because
safe and steady.
that's its track record. So
Right.
if you want to hold your purchasing power, if you want to get some distance between what's going on with the banks and the markets and the speculation and privacy issues and control issues, gold has to be, Jen, and silver right now, on people's mind. It's more important than ever. And in my opinion, the price isn't anywhere near where it could be 10 or 20 years from now, just based on where it was 20 years ago. Look,
Yeah.
20 years ago was at 280. Today, it's at 2,100. So that means if gold in the next 20 years does the same thing that last 20-year period was,
Think about it.
it would be literally 15,000.
It's incredible. And so that's why you want to do this now. You don't want to wait around because I can tell you, we don't do predictions here, but you just look at what's happening historically. You look at what our leaders are telling us. They're going to continue to spend. The dollar is going to continue to lose its power. And what does that mean for you? Well, it means that you better have a little bit of gold and silver put away, because gold and silver is going to continue to gain ground. And so you don't want to be playing catch up in 20 years going, oh, I wish I would have gotten gold when I listened to Ken, when I listened to Jen. Now is the time. 855-322-4653, 855-322-GOLD, 855-322-4653, always MidasGoldGroup.com.
That's right, Jen. And we also wanted to compare gold versus the dollar, obviously, right?
I mean, that's the gimme, right?
And let's just say, let's make it relevant. Let's say since 1999, so roughly 5 years ago.
That was Prince's favorite year. 5 years ago. That's what it feels like.
He's not with us anymore.
He is not.
Oh, no. I'm wrong. 2019.
2019. Okay,
Yeah,
so that's just a few
2019.
years ago. Great.
Yes.
5 years ago, as you say.
Now, according to all of the statistics that we see, and I don't know how much they hold water, they say that the dollar has lost 25% of its purchasing power in the last 4 years.
Wow.
I think it's actually more than that.
That's
okay?
insane, though.
Well, just look. I mean, anything that you look at, I mean, it costs at least 25% more than it did.
And it feels rapid. You know, sometimes they can slide. You don't notice it happening. But the last 4 or 5 years, it's been very noticeable.
It's picking up steam. That's right. Well, because we used to be able to export a lot of the inflation to other countries, and then they would send us refrigerators and stuff. But that's not really the case anymore.
Not perhaps.
So 25% of its purchasing power has been lost. Now, the average price of gold in 2019 was $1,393 per ounce. Today, gold is over $2,100 per ounce. So gold has risen 50% in value since 2019. So even if our dollar lost 50% of its purchasing power in the last 4 years, which could be closer, that means that gold has held its value in the last 4 years compared to what our dollar has lost in purchasing power.
That's amazing. And that's not 50 years ago. We're talking about in 5 years' time.
This is relevant, Jen, because this is what people are seeing now. And this is what is causing, right, for things to be exponential. It's the free money that was handed out during COVID, which was a very convenient reason
to dig out. Yeah.
Okay. And then we have spending, deficit spending, and we have an administration, which we heard from just a little while ago, and they continue, and they're on a pace now, $1 trillion every 100 days. So if you look at that pace, we're going to be at $45, $50 trillion in the next, 8 to 10 years. And when you talk about interest rates, even if they stay where we are today, the interest on our debt is going to be $2-3 trillion a year. We have to print that too. Wow. So we're in a real bad situation here. We've done it to ourselves. We can thank our wonderful politicians and our wonderful central bankers, and we can still do something about it. And that's what we're talking about. So I would just alert people that this is not going to end well by printing more money. It's not going to end well by taking out more debt. It's not going to end well by doing more deficit spending. It's all fine and dandy when people are making a little bit of money on their stocks or on their real estate.
Right.
Eventually, that's not going to be. Eventually, you're going to possibly be left with very little paper, and you better make sure that you have enough of your money transferred into something tangible that you could hold on to. And based on what you and I have talked about just today, has held its value and its purchasing power easily compared to these other assets over the last 30 to 40 years.
And this is what we say. I mean, the news is not all bad. The news is that today, this week, you can take action. You can give yourself some freedom. You can free up some of the money that's stuck in a dying system. You can free up some money, pull it away from the bad decision-making of our elected officials, and you put it into gold. And here's what you do. Veteran-owned, America First Patriots, ready to talk to you, not a call center. Midas Gold Group is the place to go. 855-322-4653. That's 855-322-GOLD. 855-322-4653. That spells gold. You can also go to MidasGoldGroup.com, get all of that free information, the podcast, the blogs, and of course you can text the word gold to 232425. Midas gets right back to you. And always see them face-to-face as well. Thousand Oaks, California, or Phoenix, Arizona. 855-322-GOLD. Ken, a great show today. Thanks for all that info.
Wonderful to be with you.
It's the Gold Standard Radio Show with Ken Russo and Jennifer Horn.